Hello, this is Manoush Samarodi reporting for World Risk and Insurance News. Our top story, Nathan King is at the NASDAQ market site here in New York to review third quarter financial results in the industry. In another Asia Pac in Focus, host JP Schmidt interviews an executive from Chartis Corporate Solutions in Japan. And in another installment of Best Day on RIN TV, AM Best looks at the insurance market in China. This and more from the Video News Network for the global insurance community. You're watching World Risk and Insurance News.
From our news bureaus around the globe, this is World Risk and Insurance News.
We begin our report with our top story. Most companies in the insurance sector have reported their third quarter financial results. Nathan King reports from the NASDAQ market site in Times Square on just how the industry is faring in a year filled with unprecedented losses, complicated economic pressures, and evolving regulatory changes.
While the profit picture has been strong for most of the S&P 500 companies in the third quarter of 2011, it's a different story when it comes to insurers. Property insurers like Chubb saw third quarter profits affected by Hurricane Irene, floods, and unusual autumn snowfall here in the US. And while it's hard to say whether the market has truly changed, several insurers, including Chubb, Travelers, RLI, have reported stronger pricing in several lines. European insurers reported tough economic conditions, and the Eurozone debt crisis were hitting the life segment. Companies like Aviva and ING reported weaker quarterly life sales in Europe, reflecting consumer fears over sovereign debt defaults and a sluggish economy. Non-life business has fared somewhat better. While competition has prevented higher prices in many European countries, insurers are beginning to introduce gradual increases to compensate for a drop in investment income and suppressed interest rates. Aviva, for instance, Britain's second biggest insurer operating in the life and non-life markets, saw an 8% decline in 9-month life sales. However, that was offset by a 9% increase in non-life premiums. For some in the non-life sector, third quarter numbers were bolstered by growth in emerging markets, with companies like RSA and Old Mutual announcing healthy sales in Asia and Latin America. Reinsurer results have been mixed. While Hannover Re reported reinsurance prices rising 3 to 8%, Munich Re and Swiss Re expecting more modest increases. And in a surprise to some, Munich Re missed profit estimates in the third quarter due to the adverse impact of Europe's economy. Still, the world's biggest reinsurer expects to post a profit for the year. Higher premiums, of course, benefit insurers, brokers like Aon, Marsh & McLennan, Willis and Arthur Gallagher that depend on commissions for much of their revenue. Increases in commission income were offset somewhat, however, by weakened economic conditions at the larger intermediaries. So, mixed financial results in the industry through the first 9 months, perhaps no surprise given the type of year it's been.
Thank you, Nathan. We turn our attention to Asia Pacific. In this edition of Asia Pac in Focus, JP Schmidt discusses captives with his guest Orito Takeshi from Chartis Corporate Solutions in Japan. Here are highlights of that interview.
Asia Pac in Focus with JP Schmidt, brought to you by the Hawaii Captive Insurance Council.
Welcome to the show, Orito-san.
Thank you very much. I appreciate it.
What have you seen as trends in the captive market in Japan?
Oh, well, captive market is pretty mature in Japan. As you know, in Japan, maybe right now the third largest GDP countries in the world. But the captive is only 80, 90 captives exist for the Japanese corporations. But now I feel the more strong demand to utilizing captives for the futures because the situation has changed. We introduce more new accounting standard or new tax reform. So right now for the Japanese companies, the tax could be a very beneficial tool for the risk management. So that's why I think the trend of the Japanese company to utilizing captive will increase in the near future significantly.
What are the benefits of Hawaii as a domicile for captives of Japanese companies?
Yes. For Japanese companies, sometimes they really mind about a tax issue. Because they like to utilize a captive because it's good tool for the risk management, but they're really afraid of a Japanese tax authority. So in this case, U.S. captives domicile will be better for them or the best for them because they don't need to worry about the national tax authority in Japan if they set up the captives in USA. But among the USA, the Hawaii is the most popular place to Japanese people because Japanese second, third generations exist in Hawaii. It's very, very familiar.
I'd like to thank Takeshi Arito for joining us on our program today, and thank you, our viewers, for watching.
If you'd like to see more from JP's interview with Arito Takeshi, simply go to the RIN TV On Demand library. Registration is always free. In future segments of Asia Pac in Focus, JP Schmidt interviews Gregory Myers from Beecher Carlson and Derek White from Strategic Risk Solutions. And now we're fortunate to have another contribution from the AM Best Company. In this edition of Best Day on RIN TV, host John Weber speaks with Yvette Essen from AM Best in London regarding opportunities within the non-life and life insurance markets in China.
AM Best has just released a new special report examining the insurance market in China. The report looks at how China's insurance market is standing out, although it states Chinese companies need to continue to evolve. Yvette Essen, author of the report and Director of Industry Research, Europe and Emerging Markets, is here to tell us about that report. Yvette, can you tell us a bit about how the market is growing?
The report looks at the reasons why the market is growing, and it examines how top-line growth is still occurring, particularly on the non-life side, and that's despite motor sales slowing down. And it's quite important to note that non-life accounts for 74% of total non-life premiums. However, on the life side, there isn't so much growth. In fact, there's been a bit of a slowdown, and that reflects new bank assurance rules that recently came into place.
Yvette, can you name some of the ways that the companies need to evolve?
There are a number of ways that companies need to evolve, perhaps most important being that they need to continue to grow in terms of having the capital to support underwriting growth. So we are seeing some companies raise more money, for example, through subordinated debt, or they're looking at things such as initial public offerings.
Now, the report touches upon the role of international insurers in China. Yvette, what are the trends there?
There seems to be a trend where companies are still interested in gaining a foothold into China. So we are seeing international companies looking at acquiring stakes, for example, in Chinese enterprises. However, we're also seeing in some instances that some foreign companies are withdrawing from the market or reducing their stakes in insurers as well.
If you'd like a copy of the AM Best report on China, you'll find it at ambest.com. Now, before we close the program, we'd like to draw your attention to a new RIN TV poll, now available on the World Risk and Insurance News homepage. The industry faces numerous challenges in today's market and economic climate, but we'd like to know, what is the biggest challenge facing the property casualty insurance industry right now? Is it soft pricing, global economic conditions, regulation, new legislation, emerging risks, or employment? We'd like to know what you think. That's been our report. I'm Manusha Marodi, reporting from New York. Join us next time for more World Risk and Insurance News on RIN TV.